check out Nvidia because now we are talking about $5 trillion in market value. The company is nearing a $5 trillion market valuation after announcing a flurry of new deals yesterday in Washington at its conference, first unveiling a $1 billion investment in Nokia for a 2.9% stake to develop AI networking solutions, a 6G cellular platform as well. The company also unveiling NVQ Link, a new system connecting quantum and graphics processing units, or GPU computing. Nvidia also partnering with the Department of Energy to build 7 new AI supercomputers. It's also set to team up with Eli Lilly on drug discovery projects, Palantir to bring AI into enterprise operations, and Uber to power its next generation robotaxi fleet. Can't keep up with all these deals. I mean, $5 trillion in market value. Wow.
Wow, exactly, which is equivalent to the GDP of Germany, right? That's how insane it is.
Yeah.
And you're right, you almost can't keep up with the news. I had to read like 5 articles this morning just on Nvidia. And if you look at it over the last 3 years, it's up 1,200%, like since we announced ChatGPT, back in October of 2022. It's just been on this massive run. And I think that's what we're going to be looking at this next 2 days. We have the 5 mega cap, or the hyperscalers are going to be announcing their earnings. And it's all going to be about how much are they spending on AI, that infrastructure. And it's going to be like $360 billion this year, which is amazing. And then that goes to like $500 billion by 2027. So, obviously, we're in the middle of it. Bull markets are more fun than bear markets, and I would say the surprises come to the positive. But I think as an investor right now, even with all the excitement, and I don't like to be a buzzkill, I like to keep the party going, is at some point, right, our anticipated spending in this AI trade, it's probably not going to be as good as everybody thinks. And what I think investors have to ask themselves, when that happens, is their portfolio allocated correctly? So I think right now what you have to think about is you want to diversify your money away from the big tech trade. It's doing great, but at some point the party's going to stop. And my crystal ball broke like 25 years ago, got in the business. I can't predict it. So I think that's what you have to think about right now. And I think it's going to be very good earnings this week and still continue to go high.
I think you make a great point. I mean, at one point, Jensen Huang was talking about $3 to $4 trillion in spending on AI infrastructure and data centers. I mean, wow. At some point, we're going to need to see a return on investment, and companies are going to want to see that ROI before committing new money. So when that is, I don't know. Are we actually going to hear how much money they're spending this week when we get these earnings? I mean, Gregory, we got Microsoft, Meta, and Alphabet out after the close tonight. We've got Amazon and Apple out tomorrow. And you look at $5 trillion nearing for Nvidia. Well, Apple briefly topped $4 trillion in market value yesterday. First time ever for that. Microsoft crossed the mark of $4 trillion after finalizing a 27% stake in OpenAI and its for-profit business. Apple stock up 25% just in the last 3 months, driven by strong demand for the new phone, the iPhone 17. What do you make of all of this, and what are your expectations for earnings tonight?
Well, look, I mean, I think the earnings numbers are going to be pretty solid. It's all moving, to Ryan's point, it's all moving really, really quickly. So it's hard to ascertain, I think, at any given time where we're at. I view AI similar to how I viewed commodities years ago. It's part of your portfolio. You need to have it as a core part of your portfolio. But to Ryan's point, you probably need to diversify within AI in and of itself.
Yeah, I mean, I don't think you're going to be able to get, said this earlier, I don't think you're going to be able to get Nvidia below 100 anymore. I mean, it was at 89 on April 2nd or April 8th, the bottom during Liberation Day, hysteria over President Trump's tariffs. What do you think?
Yeah, I think right now, because the problem...
It's at 209. Come on.
It's to 209, and we have the Fed that's stimulating, right? Today's like, this is the party today, right? We got the Fed's probably going to cut again, along with all these great earnings numbers that are going to come out. Long-term yields, we're talking about that. The 10-year now is under 4%. Yeah. And I attribute a lot of that to the fact that oil prices are plummeting. That's very disinflationary. Absolutely. Which is very stimulative as well. And again, I always talk about that $7.4 trillion sending money market funds. At some point here, you're going to be at like 3% on that money market fund, maybe under 3%. Where's that money going to go? I suspect a lot of it's going to the stock market. And if you buy the S&P 500, that goes right to the Mag 7 trade, because that represents like, a big component of it, almost 40% of the S&P 500 of those 7 stocks. So you have a big bid under those stocks right now.
3% in money market, double digit in equities year to date. I think I'll stick with equities on that one. Ryan, great to see you.
Thanks, Maria.
Thank you so much. Ryan Payne joining us. Gregory, you were with us all morning, and we're so grateful for that. Quick break, and we'll be right back. Stay with us.